BlockFi officially files for Chapter 11 bankruptcy and is Wrapped ETH depegging. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Be sure to follow us on Twitter at AltcoinBuzzIO. And as always, this is not financial advice and we wish you the best of luck in your crypto ventures. And don't forget, for a limited time, our Altcoin Buzz access group is free. And while it is, you can get our great weekly market and NFT update reports from our amazing research team. Check them out for free now. The link is in the description below. Now, let's get into the news. Smaller retail investors have turned increasingly bullish on Bitcoin and started accumulating more Bitcoin despite the ongoing market crisis. There are two types of retail Bitcoin investors that have been accumulating the record amount of Bitcoin following the collapse of FTX. The first type of investor, classified as shrimps, or investors who hold less than 1 Bitcoin, meaning less than 16,500. While the second type are crabs, who are holding up to 10 Bitcoin or $165,000 worth as of right now. Whales being the biggest at over 1,000 Bitcoin or $16.5 million worth. Shrimp investors reportedly added 96,000 Bitcoin or $1.6 billion worth to their portfolios following the FTX crash in early November, which is an all-time high balance increase. At the same time, crabs had bought about 191,000 Bitcoin or $3.1 billion, also another all-time high. Some big Bitcoin investors have claimed to keep being bullish on Bitcoin despite the ongoing crisis, with the government of El Salvador starting to purchase Bitcoin on a daily basis starting from November 17th. Elon Musk also expressed confidence that Bitcoin will make it despite the current industry issues, but there might be a long crypto winter. Fidelity has also officially started Bitcoin trading for retail accounts, commission-free, which adds to the ease of use for even more retail buyers. Over the weekend, an inside joke that Wrapped Ether, or WETH, was on the verge of insolvency spooked crypto Twitter. Crypto Twitter is understandably on edge these days given the rapid market-moving news cycle of the last month. With so many institutions in the crypto economy on the verge of insolvency, the failure of another wouldn't be surprising. DAOs, protocols, and everything in between seem to have been drained or hacked in the last few months. So when the joke popped up suggesting that WETH might be next, it was apparently real enough sounding to be taken seriously by some readers. ETH sank 4.8% in the next 24 hours, outpacing Bitcoin's drop, although there's no proof that the decline stemmed from the joke. It may have also been the crypto whale sending 73,000 ETH to Binance to potentially sell, which we covered yesterday. So could Wrapped ETH go insolvent? Well, no, it wouldn't go insolvent, but can trade slightly under the pegged price from time to time. Wrapped ETH is ETH that just represents ETH, typically on another blockchain. So when you wrap ETH, it's locked and a one-to-one amount is created as wrapped ETH. As long as it's always possible to unwrap Ether, which the smart contracts will do without a centralized authority, WETH will always continue to properly function. Avalanche has surged to new highs this year with 68 million transactions in September, up 51% from August. The leading Avalanche subnet DeFi Kingdoms chain processed 1.1 million transactions daily in Q3 and has raised to about 2 million per day now. Last week, Avalanche broke 450 million total transactions, which is up over 1,507% from 1 year ago. Do you guys think AVAX will come out ahead in the next bull run? BlockFi has just filed for Chapter 11 bankruptcy as the FTX contagion takes another down with it. BlockFi announced earlier this month that it had halted withdrawals, citing significant exposure to Bankman-Fried's FTX exchange, as well as the sister hedge fund Alameda Research. Shortly after filing for Chapter 11, BlockFi filed a lawsuit against Bankman-Fried's Emergent Fidelity Technologies vehicle, demanding he turn over the collateral that BlockFi claims it is owed. That collateral is Bankman-Fried's 7.6% stake in the online trading app Robinhood. In its bankruptcy filing, BlockFi said it owed money to more than 100,000 creditors, the largest creditor listed as Incur Trust, a company that represents creditors in stress situations, which is owed $729 million. FTX, BlockFi's second largest creditor, is owed $275 million. BlockFi has about $257 million in cash on hand, and the company expects that will provide sufficient liquidity to support it during restructuring. The company estimates it has between $1 billion and $10 billion in assets and liabilities, according to the filing. Part of the restructuring will include layoffs. It wasn't immediately clear how many employees would be let go, but the company had said it initiated an internal plan to considerably reduce expenses, including labor costs. The New Jersey-based company was one of several that received financial support from Bankman-Fried over the summer as the falling crypto prices threatened to take down key players. In July, BlockFi secured a $400 million financial lifeline from FTX. Restructuring processes can be notoriously lengthy. Creditors involved in Mt. Gox, a Bitcoin exchange that went bankrupt in 2014, are only now getting closer to being paid 8 years later. Yesterday, Andre Cronje posted an article about Fantom's financial growth, and the price of Fantom rose 20% soon after. Fantom is a layer 1 blockchain that provides DeFi services to developers using its own bespoke consensus algorithm. Cronje goes on to explain Fantom's financials throughout the years, with the highlight being that as of right now, in November 2022, they have over 450 million Fantom tokens, over 100 million in stables, 100 million in crypto assets, 50 million in non-crypto assets, and a salary burn rate of 7 million a year, giving them 30 years left without having to touch the Fantom tokens. They also produce over 10 million a year excluding capital gains, while being cash flow positive and scaling up. Everything you want to hear from a crypto project in a bear market. Cryowar, a real-time PvP play-to-earn game built on Solana and Unreal Engine, has just launched its open beta registration for iOS and Android. We've covered Cryowar on Altcoin Buzz before, but to recap, Cryowar is a next-gen blockchain multiplayer game that is a mobile free-to-play arena brawler. The medieval metaverse is a cross-platform game and does not have any pay-to-win features, making skill the only thing that can carry you up the ranks. The open beta access will be available now until December 9th, and you can now get access to play with their incredible next-gen graphics and an easy-to-use mobile game that you can play anywhere. Hedera, a proof-of-stake enterprise-grade public network, also known as HBAR, has had a rise in its NFT sector this past quarter, with NFT active users growing 90% quarter-on-quarter and transactions growing at 107% quarter-on-quarter, each setting all-time highs. Do you guys think we'll see HBAR emerge as a top contender in the coming years? That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.